All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Look, I wanted to do a quick little update on the ADP number that came out yesterday. So it was a little bit of a disaster, to be honest. However, this is what I was a little bit expecting. I'm not going to lie. But anyway, we'll look into that. Before we go any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yesterday, like I said, we got the final job number before the Federal Reserve interest rate decision. In a way, the more important one. We'll get JOLTS as well. Don't get me wrong, but yeah. Look, also a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, the economic calendar. So, very quickly into Wednesday here. So this is what I am referring. I'm going to go straight into this. So yes, there we go. Minus 32K came out. The forecast was plus 10K and the previous figure got revised to 47. So let's launch the chart here. Okay, let me just adapt this. There we go. So this has been the fourth time that the number has dropped into negative territory for this year. And what's also interesting is that it has been since March of 2023 that the figure was kind of that low, So in March 2023, I can see that it was around 53K in the minus here. Let me just, I don't know if this chart is going to show it this way, but for some reason the ADP here doesn't show that on this chart. But look, the figure last time in March was at minus 53K. For some reason, this chart doesn't show. But anyway, maybe the latest data is more updated than this one. So, the problem that we have is the fact that it is now repeating. It's the fact that it's not like just a one-off drop into negative territory. No, we're seeing actually now a tendency. And although the recent NFP did not show us this, but still, I think that the ADP number right now is becoming the go-to figure, the one that kind of shows a little bit of a more realistic problem. This recent government shutdown kind of showed that there are issues with the NFP, with the Bureau of Labor and Statistics. So people are kind of shifting a little bit from that NFP. Everybody's looking at it, but it's interesting. Like before, I remember myself even when I was looking into ADP, I was always saying, look, ADP is important, but not as important as NFP. Now it's kind of flipping, and now we're focusing a little bit more on the ADP number. From what I read here, and in terms of which kind of sectors felt the decline, those were the manufacturing, professional business services, information, construction, and financial activities. These are the ones that lost the most. The ones that added jobs were education and health services, hospitality, natural kind of resource and mining, and trade, transportation, and utilities. So these jobs gained. So basically, you can see how the sector now is shifting, and you can see how AI is having its little footprint on this little damage, I would say, because again, all these white collar jobs like mine, although I'm not wearing a white collar right now, it's more of a green t-shirt. So yes, my job, like the other people's job, office jobs, they're all at risk, and it's the new progress where we're heading to. So nevertheless, the market, the way the market interpreted that news. Let me just jump into the charts very quickly. So Dow Jones Industrial Average, look at this beautiful thing, boom to the upside. By the way, in general, Dow yesterday gained. Nasdaq was the least beneficiary, and S&P gained beautifully here. So it's somewhere in between Dow and Nasdaq as always. But the Russell 2000, there we go, boom to the upside. So looking at this these charts here, look at this. Dow Jones Industrial Average rallied, and I talked about this, and I said, look, keep your eyes on this area near the 48,000 zone. And at the moment, I think that this is something to be watched, and if this provides good resistance, then we could see a nice, beautiful decline. However, let's not rush into this idea of maybe considering declines just because we're heading towards the Fed interest rate decision, which is next week. And I did a little piece on YouTube. You can check it out, one of the latest videos on central banks, which are coming out in December. And yeah, we're expecting a rate cut there. At the moment, it's 89% probability of a cut. So it's a done deal in a way. And I strongly said that I think that they will continue. They will do that. They're not going to really go away from that. I said that in November, in the beginning of November, because in the beginning of November we had this shift where yes, it's a guaranteed rate cut in December. Then throughout the whole November we saw a little bit of a market correction, just because there were rumors that, oh, you know what, why we do need a rate cut if we're, we could see some inflation, and the market didn't like that. We saw a little bit of a decline, but now we're getting back to this point where we're gonna get the rate cut just because I think that they want to support the labor market. I don't know if lowering interest rates will help the labor market a lot, because my problem with this concept right now at this point, I would say, is that yes, on one hand, it is seen that if we're going to lower their interest rates, it's going to be easier for the companies. Companies can then recruit more people, and basically, everybody lives happily ever after. We get beautiful job numbers. That said, let's not forget that in which time we are living in right now, because we're on the contrary seeing jobs getting cut. So my issue is that if we're going to get the lower rates, yes, the companies will benefit, but are they actually going to employ more? I really don't think so, because I think that they're going to throw out some resources towards seeing how can they optimize their business, their day-to-day activities, with the help of AI. So it's going to be cheaper to borrow, but is it going to help out the labor market as much? I really somehow doubt this. But again, we're living in this kind of society. We're living in this kind of world where we view things this way. So, okay, right. Yes, for the stock market, yes, great. We could see some more upside, but is it going to fix the labor market? I really doubt that. So, again, we'll see. We'll see, of course. Maybe everybody's now talking, how we're going to shift, how people are going to shift from one job to another job, this whole industrial revolution, which is fine. It's okay, but, as always, the transition is always never properly thought through, and we always have these issues, right? So look, long story short, for now, do I believe that the stock market could rally? Yes, because it involves companies, right? I mean, it involves companies which are going to benefit from the lower interest rates. And again, is it going to fix the job market? Are we still going to see lower ADP, lower NFP figures? I think so. So it's going to be this, as they like to say right now, K-shaped economy. Companies are doing fantastic. Labor market, us mortals are, well, not so much. Look, the other thing to watch out for going into next week in terms of job numbers. Look, on Wednesday, yes, we're getting the Bank of Canada and the Federal Reserve interest rate decision. So this is going to be a very important day. On Tuesday, on the 9th, we're going to get the RBA interest rate decision as well. So, but in terms of job numbers, we should be getting JOLTS. And if I just update the Bureau of Labor and Statistics website, so we can see that on the night, job openings and labor turnover survey. So again, for now it's scheduled, but lately I have learned one thing, that I will believe it when I'll see it. So at the moment, I would say just let's wait for that day and then we'll see. But what we're expecting is a decline. We're expecting a decline, and actually we're expecting two data sets coming out to come out. One's for the 1 month, one's for October, and the other one's for November. So will that be the case? Again, we'll see. So let's not rush into things, but just to let you know that, like I said, jolts are the ones to kind of to watch as well on the 9th. And then in terms of the main labor data, I think is going to be on the 11th. Let me just double check if that's going to be the case. On the calendar here, are we going to get the NFPs? For some reason I'm not really seeing, or is it going to be the week after? Maybe the 16th or the 19th, something like that. Let me just double check, remind myself, because again, yes, there we go. Average hourly earnings, non-farm payrolls. So the 16th of December. So we're only going to get the 16th. On the 16th of December, we're going to get the non-farm payrolls, which, from what I understand, will include October and November together. Again, let's see how that's going to play out, of course, but certainly looking at these indices here, there's still potential. Look at the S&P, looks positive. It seems like it wants to go higher. It rebounded beautifully from this downside line. So in a way, I'm going to lean a little bit more towards the upside, and by a little bit, I mean I'm going to aim for the all-time high. And NASDAQ also has some room to the upside. I talked about this 25,700 zone. I said to you that this is a critical point. If we do clear this, yes, I'm going to go for the all-time high as well. In terms of the US dollar, now this one is suffering. Well, we understand why, because again, this is all due to the labor market, and of course the interest rates, which are expected to be cut. So for now, I think that yes, there is a path for this one to the downside. I don't know, a miracle has to happen here of some sort, so in order for this one to bounce back up. But at the moment, yes, I'm leaning towards the downside on DXY, meaning that Euro USD. With this one, I'm planning to go higher, and just purely from forgetting the fundamentals, purely from the technical, it cleared the upper side of the range, kind of formed something of a double bottom here. So let's see if we can move back to the 1.1779 zone here, or even higher. Regarding the commodity world, look, 4,200, that's where gold is currently sitting at, but it's still looks somewhat positive. I don't want to rush into things. Look, after breaking this downside line, basically after breaking this triangle, which I talked several times about, we broke it to the upside, traveled higher, found resistance near the 4,245, it held here. We're now seeing a retracement, and if we do stay somewhere above this upside line, well, there is a good chance of a rebound and a push higher. So, but in other words, look, I'm just gonna keep an eye on the 4,245 level here, and then just, yeah, I'm gonna go higher. But at this point, it is interesting. Don't get me wrong. If you're a bull, I would say just wait a little bit, because again, maybe we'll see a larger correction back down here, despite the DXY being on the lower side. So I think that there could be a little bit of a correction, a larger correction here. However, if it starts piercing through the 4,245 area right here, yes, I'm going to go to the upside. Silver, now silver is retracing today. We're seeing a nice correction back down, which is fine. So if we do draw a little Fibonacci here just for fun here, from this low, the low of the 21st of November, to the current all-time high, we'll see that we did the 23.6 here on the Fibonacci retracement. So if you're looking for some lower levels, well, basically just need a clearance of that 23.6, and then we could aim for that 50%, or even maybe the 38.2, or then the 50%. So good potential targets here, but again, a clearance of this 23.6 would be needed if you're drawing it from the low of the 21st of November to the current all-time high. If we draw it maybe on a bigger picture here, then yes, there's more room to the downside. But look, I think given that this is not a picture perfect move here, we had a substantial retracement here, so that's why I'm just gonna measure from the recent strong rallies, from the beginning of the recent strong rally, and where it kind of paused a little bit. So this, I think this is quite reasonable. So let's see if this can go back down here, back below the 56.5 zone, and then yeah, we'll go from there. Ladies and gentlemen, that's it. Look, I wanted to do a little quick update. I think, like I said, the job market, the U.S. job market, is quite important, and given that what we saw, yes, we are seeing here a bit of a problem. Let me just grab this one. I want to do the where the coordinates here. So let's do 0, and we will see that, look, this has been, like I said, the fourth time that we were in this negative territory for the year. This is where we started, right? So if this is going to remain like this, I'm sorry, but this is not, the whole AI, the whole central bank story, lowering rates, I don't know. I mean, yes, it will give impulses to the upside, but in general, it's not going to be a representation of a real economy. And this is where eventually, the market will pick up on this. So, long story short, keep your eyes on the jolts now before the Federal Reserve interest rate decision, and we'll go from there. Ladies and gentlemen, thank you very much for watching and listening. As always, thank you very much for your support. As always, don't forget to like and subscribe. And as always, as I keep on saying, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.